There is a changing housing market, obviously. I mean, the prospects of building wealth through real estate is always enticing. Everyone that comes to me on this channel is talking about how they want to be a participant in real estate in some way. So we're always looking for ways that you can get in and participate in real estate, but it is not looking very promising for those of you that are wanting to buy this spring. It looks like, according to data, it is going to be a scorching market. Guys, this is not easy to do, all right? I want to help you guys get in to real estate. It's very important that you have the competitive edge if you're wanting to be involved in taking advantage of whatever happens in the long-term side of buying properties for the next 10 years. Sitting on a beach in Bel Air, Florida, near Clearwater, in a property that I just acquired. You can see here, it's a little 1,500 square foot, 2-bedroom, 2-bath condo, okay? This is what millions over the last 10 years looks like. It's not bad. There's a lot of freedom. I'm going to go to the beach later. I've got a lot to do today. Everything I'm excited about doing, and I get to control all of it. All right. And I want to talk with you guys about this article because it's really, really interesting. And you may be surprised that the number is that high, because I'm certain none of us are surprised that people who have been homeowners over the last 10 years have done very well, right? If you're a homeowner, you've done very well. But that number really hit me. I'm like, how can that be possible? I know people are still overspending. The cost of fuel is outrageous. The cost of inflation is outrageous. It's shrinkflation. I mean, I go and buy a bag of potato chips. It's like I'm buying, the old bag at Subway, the little mini personal bag. A family size is now single. To me, I can eat the whole thing. So I'm not sure where all this money went, but I think that there's a lot to unpack behind this article, and I want to kind of go through some of that stuff with you. I did have a quick conversation with a guy yesterday that he got started in the B&B bootcamp stuff that we talk about here on the channel. He said, it's not as easy as I expected. He wasn't complaining. He's actually feeling very optimistic about it. However, I thought that was an interesting comment, because I do want to start this conversation about this article by saying the old saying of work smart, not hard is true. You can work much smarter, but somebody that wins a game of chess in 4 moves is working smarter. It wasn't easy. It took a lot of time to understand how to navigate that strategy, and it usually does not happen by accident, okay? That's lucky if it does. If somebody is smart enough and experienced enough to beat you in a 4-move checkmate, that has been a lot. That's a culmination of a lot of work, okay? A lot of time invested. And so you're going to have to put in time if you want to succeed. So let's get into this article, okay? According to a recent report by Fortune citing studies by the National Association of Realtors, nearly 1,000 U.S. cities increased by over $8 trillion since 2010. The National Association of Realtors estimates that 86% of the wealth of homeowners that built wealth during this period, it came from home appreciation, with the median sales price of a home rising at an annual 8.3%. Between 2011 and 2021. Obviously, depending on population, job growth, certain cities were much higher and others lower. Now, it's not all good news here, folks, unfortunately, because according to the National Association of Realtors, 58% of metro areas saw household wealth grow for middle-income homeowners, but it declined in cities that have seen their housing markets explode over the last decade, like Los Angeles and New York. They saw big declines for middle-income households. In spite of that, the wealth increased from appreciation, okay? And so it was a overall increase to wealth, but there were some major declines for those households during that same time. So while household wealth for income earners grew overall, that is not true for lower income homeowners. In fact, low income homeowners make up 27% of all homeowners. They saw only a 4% wealth gain during that same time. There is a changing housing market, obviously. I mean, the prospects of building wealth through real estate is always enticing. Everyone that comes to me on this channel is talking about how they want to be a participant in real estate in some way. So we're always looking for ways that you can get in and participate in real estate, but it is not looking very promising for those of you that are wanting to buy this spring. It looks like, according to data, it is going to be a scorching market. And really, it's become almost impossible for the younger generations, millennials, Gen Zers. Guys, they make up the largest portion of the buyer's pool, and they're flooding the home buying market. But the pandemic and remote working has essentially made homeowners a lot less willing to sell. You're not seeing people turn around and put their properties on the market right now. There's historically low inventory. It's no secret. Everybody knows that that's been the biggest challenge. And according to data, it's going to get worse. Apparently, December had only 1 million listings on Zillow, which is down 17.5% from December of 2020, which is actually down 37.8% since December of 2019. In fact, Realtor.com data showed that inventory of homes dropped 53% between April of 2020 and April of 2021. Part of the competition in that space is, of course, the older generations choosing to downsize, and they're cashing in on these bigger, expensive homes and have more money for proceeds to put down. They're more competitive and sophisticated, experienced in the home buying process, which means someone like myself who walks in and this is the only property I looked at and I was able to get it for $640 from an ask price of $650 and an appraised price of $655, which it's now appraising for $700 already. It gave me the competitive edge because I had access to the capital and the borrowing strength to get in, get under contract, and in spite of falling out with my first lender 2 weeks into the loan application, was still able to get this deal closed by the 30-day closing deadline. Guys, this is not easy to do, all right? I want to help you guys get in to real estate. It's very important that you have the competitive edge if you're wanting to be involved in taking advantage of whatever happens in the long-term side of buying properties for the next 10 years. And in order to do that, you're going to have to find revenues that jump your cash flow. If you can jump your cash flow by $2,000 a month by driving for Uber or Lyft or any other ride share, or go out and do something like DoorDash, $500 a week, put in 10, 15, 20 hours a week and literally generate that side hustle income. I know it sounds tiring. I know it sounds exhausting. And what did I say at the top of the show? You've got to make sure that you understand this is not going to be easy to create wealth. But if you can pop your net cash flow position from 1,000, 2,000, 3,000, 4,000 to 6,000, 8,000, 10,000, 15, 20,000, now all of a sudden you have the competitive edge because you're able to start going in and increasing your borrowing strength and increasing your options to make really good investments. And that's how you scale this thing out, folks. But if I were going to put in 10, 15, 20 hours a week, I would say, why focus on something that only has a $500 to $1,000 or $1,500 per week potential? Why not get out there and look for things that have a $10,000, $15,000, $20,000, $25,000, $30,000 monthly upside potential, at which time I could probably step back from whatever I was doing that took up most of my time during the days, my typical day job, as we like to call it, whatever you're doing that's earning less than that, and you can then focus all of that time, essentially full-time hours and more, on top of the 15 to 20 hours that you're already putting in. And with a 60-hour commitment to what once was a side hustle that now becomes sort of your primary empire, you're able to really realistically generate several $100,000 and up and scale it out. And at that point, because of the systems and processes that you've put into place, you can sort of automate that experience. You have other people that you can delegate it to, and then you can repeat that process over time. And that's what I've done. That's how I've managed to put together a whole collection of income streams, is through a lot of hard work on the front end, automating that through processes and systems, and then delegation. And then once I free up the bulk of that time again, I'm able to just repeat. And with that comes a lot of new cash flow. If I'm cash flowing $20,000 a month, $30,000 a month, $50,000 a month, and you're cash flowing $2,000, $3,000, $5,000, who's going to have the competitive edge to go out there and take advantage of the long term in this type of a market for the next 10 years? So here's my recommendation to you. You've got to explore. I personally am not going to be putting in my time ride sharing. You can. I don't fault you for it. I think it's important that you're doing something. Anything but nothing. Don't do nothing. But instead, I'm going to be taking my time and putting into the things that have a lot more upside potential. $10,000, $15,000, $20,000, $30,000 a month or more in upside potential that I can then scale out. Okay. With that, there are only a few options that I've been able to find over the past few years. One is the B&B Bootcamp. I love that. But today I want to share with you that the Pink business model, Little Pink Houses of America, still stands as one of the top models that I've ever encountered. It is a franchise-esque type of an affiliation They charge money to get involved. It's not inexpensive, but it's substantially less expensive than a typical franchise. And it's also a lot less expensive than other businesses that I've started from scratch to get everything handed over to you as a blueprint. Okay. They also finance it, which means that because there's a variety of ways that you can pay for it, this, unlike buying a property, right? If you wanted to take this money and go out and buy one piece of real estate, it might make $300, $400, $500 a month in net cash flow for you. What you're really hoping for is the great appreciation that we've managed to take advantage of and get access to for the last 10 years. But a $300, $400, $500 net cash flow increase is not going to move the needle at all. You won't even feel owning that. It's sort of a sit and wait, and hopefully down the road, real estate has done just as well over the next 10 years as it has the last. However, with a net cash flow solution like the Little Pink Houses model, you're able to actually make $10,000 to $30,000 with part-time hours, and you don't need the credit and the down payments that are required to go out and buy properties. You can finance the cost of the participation if necessary, and then you go out and make the bigger money on top of what you're earning that allows you to buy the real estate. Now, I don't have time to get into every detail about the business model on this video because I've done it on a lot of other videos that I'll just put in the description below. So just go and check those links out. There's a lot of questions that are going to get answered in those videos, but watching those, just commit an hour of your time, folks. If you're not willing to spend an hour of your time to really dissect a potential business, you're not a business person. You'll never succeed in it. You have to do the research to find these models. I commit considerable amounts of time to each and every potential business that I want to get involved with in order to really determine if it's a fit. It's not going to be a fit for most people. Most people are not compatible with sitting on the phone. Most people are not compatible with dealing with people. If you're good at dealing with people, if you're good at being on the phone, if you want to work from home, if you like the freedom of making your own schedule, then maybe it is a good fit for you. But you got to email pink@vipfinancialeducation.com to get some details. Again, that's pink like the color @vipfinancialeducation.com. Make sure you put your first name, last name, and phone number in the body of the email so that they can actually contact you. And then they can answer any remaining questions that you have. But watch the videos. Guys, this is a great way for you to increase your income by 6 figures per year. And then you can go out and continue to be an even more aggressive real estate investor or an investor of any kind. I'm also a heavy cryptocurrency and digital asset investor myself. I've put a considerable amount of money into that over the last 18 months and even before, but I was a bit of a loser during the first attempt. And it's worked out really well, and it will continue to work out well with dollar cost averaging and being really dedicated to consistency. But I couldn't do that unless I was building these side hustle income streams. And again, Pink may or may not be a good option for you, but I definitely have seen the results from folks. And because all these foreclosures are sort of looming on the horizon now, that only pumps this business model. It's done by region, by the way, okay, which means that they have a limited supply of where they have available. It's a lifetime. So once you own it forever, which means that if the market gets really hot in 2 years, you get to jump in and really surge that income, and maybe you make $500,000 that year, right? If you can get into the market, you lock it down, then they will not put competitors directly around you, which is the same concept as really almost any franchise. They won't put two Subways right next to each other. So, all right, folks, this is really all I have to say. I leave your comments below. I'm curious to know whether or not you were surprised by this number, $2 million in the last 10 years. Any other factors that you think we should be thinking about here as the market continues to surprise us? Leave those in the comments too. And otherwise, email pink@vipfinancialeducation.com. Put your first, last, and phone number in the body, and somebody from their team will reach out, and you guys can see whether or not this is something that might pique your interest. All right. Look forward to seeing you on the next video, guys. Keep on cash flowing. Take care. Bye-bye.
Some names and where you're from.
Bobby and Jenny Witten. We're from Knoxville, Tennessee.
What's your previous real estate experience?
So we've got some buy and hold properties. We currently have about 7 units, and we've been in real estate investing for about a year now.
Fantastic. After the last 4 days, what's the biggest takeaway?
The biggest takeaway from us is this is something you don't have to do alone. The staff here is incredible. They're supportive, they're knowledgeable, they're friendly, professional. We don't feel like we're doing this alone. We feel like we've got a team behind us, and that's going to make all the difference.